The Reserve Bank of India surprised markets by cutting rates at an unscheduled meeting on Thursday. It slashed the repo rate by 25 basis points to 7.75%, its first rate cut in nearly 2 years. Analysts say this could be the start of an easing cycle. Here is a report.
The Finance Ministry and corporate India have been lobbying for this cut for months, but Central Bank Governor Raghuram Rajan stood firm. He said he won't act until he's convinced inflation is easing. And finally, it has. December's consumer inflation came in at 5%, while November wholesale prices flatlined. The government hailed the move.
It will lead to more money in the hands of the consumer, greater spending. It's positive for the Indian economy, and it will certainly help in reviving the investment cycle that the government is seeking to restore.
Analysts say more rate cuts are on the cards, given benign oil and commodity prices. India imports 2/3 of its oil needs, so lower prices can narrow its trade gap considerably. Some say this is the start of an easing cycle. Other analysts say rate cuts from other banks could also be on the cards in the coming months.
It will depend upon what is the risk aversion in the system. It also depends on what the NPA levels of the banks are, how much demand is there in the system. So I think there could be a question mark on how fast this will get transmitted going ahead.
On its part, the government says it's committed to keeping to its budget as much as possible to try and rein in the fiscal deficit. When Dr. Rajan took office in 2013, he made it clear that taming inflation was his priority. Now, with prices on a downward trajectory, it seems the central bank is ready to gun for growth. Anjali Mathai for South Asia Newsline, Mumbai.